Hello, everyone. Welcome to this week's weekly market view for Monday, the 21st of October, 2024 to Friday, the 25th of October, 2024. My name is Vishal. Let's get started. Okay, so let's start with the Nifty chart first. And we are looking at the 125-minute chart. I've kept these levels on from last week just to show you how the concept of demand and supply actually plays out. So we had this level of demand and the price came into this level of demand. This was also on a 240-minute chart. And now prices gave a little bit of a bounce, now reacting to this level of supply. So it'll be interesting to see now whether this level of demand holds. We do see that 25,000 is acting as a strong resistance point for the market, and this is where the market actually fell. But the real supply zone is stacked up right here. So this is going to be a key level of supply. Shorting here will be a little risky since we are a little bit low on the curve here. So I'm expecting that probably if the market does move up from here and if it retests 25,000 on a break and retest, then it's more or less likely to move to the upside. Else, if we see a crack to the downside, then we see 24,000 level as a key level of demand on the Nifty. Okay, let's move on to the Bank Nifty chart now. So as compared to the Nifty, the Bank Nifty is slightly leading more than the Nifty right now. But we also see this level of demand over here. So let me just go ahead and mark this entire drop-based rally level of demand. And then you have this rally-based rally. So this is where market has taken a little bit of a support and trying to push to the upside. We did see a little bit of a sell-off from these levels, 52,500. But again, the bigger chunk of supply is sitting right up here. So it'll be interesting to see whether Bank Nifty pushes things into supply. We also had HDFC Bank announcing good results. So I was thinking that probably Bank Nifty would probably, come into this level of supply and then possibly react, but that has not happened yet, which means that this supply is still intact and any push above this area would probably involve a lot of retail traders to kind of buy on top of this breakout, probably sucking all these traders eventually into the supply zone. So keep a close watch on this supply zone because this supply zone could act as a potential trap for the Bank Nifty buyers. If you look at Nifty Financial Services also reacted nicely from this level of demand. Now, the key support is 23,400 and the key resistance is 24,500. What I like about this is that along with all the supply zones, there's a confluence of this open interest level at 24,500. And I believe that probably Fin Nifty will not have an easy time surpassing this level. So it'll be interesting to watch Nifty, Bank Nifty, and Fin Nifty all the way coming into this level of supply in the days to come. Let's move on to Midcap Select. So if you look at Midcap Select, we did have this supply zone. The supply zone violated. And just look at what happened. If you look at today, prices came into this area based around this area of supply, 13,217, just came very, very close to it and then gave a strong move to the downside, right? So clear signs that Midcap Nifty is also turning a little bit more bearish now. It stopped right at this open interest, but again, today being the mid-cap expiry, this will probably change tomorrow and probably may even shift a little bit further down. We have a level of demand on mid-cap Nifty, 12,532 to 12,475, which is the closest level of demand from current market price. And to the upside, we have 13,217 and 13,378 odd levels. So key levels to watch out for. Let's get this level out since this is already violated now. So no use of keeping this level on the chart. All right, let's look at Sensex. Again, Sensex is also behaving more or less like the Nifty. You see this double level over here and price reacted from the lower level. Again, prices are consolidating here. What is keen to see is just like the Nifty, we have a level of resistance. In fact, two levels of resistance, 81,500 and 81,700. So it'll be interesting to see in the days to come whether there is some kind of short covering that comes into the indices because, a a lot of shorts have been created for days together, and eventually, when shorts get covered, obviously the institutions and the big money is going to start, covering those shorts by buying. So that will spurt a rally to the upside, but it'll be interesting to see whether we are able to cross 81,500 or 81,700 in the current week. We are in the level of demand right now, so we should not be going short. If levels, if any level is to be, allowing you to take a short, it's going to be the 84,116 to 84,765 odd. We have supported 79,500 as per the open interest levels. All right, let's now move on from. We have one more index to cover. I completely forgot about that. So let's cover BankX. And then we'll move on to the heavyweights. Okay. So let's open the BankX chart, and you can see very closely that today we saw a strong move up. I think this was all because of the HDFC Bank result, and price came very, very close to this level of supply. As it been, I've been telling that this is a little bit of a crucial level of supply. So it'll be interesting to see how price behaves here. There's a nice 60,000 open interest level lining up with BankX. But again, today BankX also had expiry. So again, these levels will change tomorrow, and we'll have to come and check what the open interest levels are going to be for the next week for both mid-cap Nifty and BankX. But here are the key levels now. We are closer to supply on BankX. Demand is still far away from current market price, and we have already tested the level of demand already once. Okay, let me just close all the charts because then it will take a little bit of more time to load. And let's go now to the chart of HDFC Bank. So let's load NSE here. And let's check HDFC Bank. And let us see after results, how has HDFC Bank actually reacted. So this is a kind of a typical reaction. Usually, markets tend to, strongly move or gap up to the upside. So we had this level of supply on HDFC Bank, and we can clearly see now that the supply zone is slightly violated. But again, the candle has not yet closed above the supply, which means the prices can start to come down once again. We have these levels of demand over here, which were plotted last time around as well. So these are still intact, close to 1600 odd levels. And we also see the 1600 put open interest over here. Right now, based on the HDFC Bank monthly expiry, 1700 is the key support for the market. So it'll be interesting to see how 1700 holds on HDFC Bank, even if HDFC Bank comes to the downside. And at the top, you have the 1800 levels, which is going to be more or less crossing the highs of or the previous highs of HDFC Bank. So let us see how HDFC Bank is going to probably shape up, because that is going to dictate how Bank Nifty is also going to move for next week. Let's quickly look at Reliance now, and let us see how probably Reliance is moving. So Reliance is a little bearish as of now. We are into this daily level of demand, very, very interesting level. Again, we had plotted this level in the last week analysis also, and nice open interest levels also lining up, indicating that Reliance is probably looking at taking a pause over here. Now it'll be interesting to see whether Reliance starts moving to the upside, because if Reliance starts moving strongly to the upside, then it's probably going to take the Nifty all along, upwards along with it. Right. So keep a close watch on Reliance. We are in a higher time frame level of demand, and that will probably again dictate the next big move on the Nifty. Okay, so we are going to analyze gold once again. I just realized that my microphone was switched off, so I'm going to redo the analysis of gold. So as we can see on gold, market has printed an all-time high. A slightly bearish candle on gold over here. If you can see that more or less this looks possibly like a indecision candle, but now we will only see whether this turns into a doji or whether it turns into a bearish candle by the end of the day today. Right now, by the way I look at the charts on gold, it's looking bullish. So any pullback will be a buying opportunity on gold. Let's look at silver now. On silver also, we have a similar formation. Again, markets have broken this level of supply over here from last week. creating a new level of demand, 91,940 to 89,781, and a resistance at 1 lakh odd levels. So interesting to see that nice round number shaping up at the open interest level. But then again, silver is also looking very, very bullish right now. Let's look at copper. So copper, after having a good bullish run, has taken a little bit of a pause over here. It gave a nice move from 772 all the way to this 867 supply zone. And look at how the prices just barely touch this level and have reacted and come back into this level here. So now we are into this level of demand. This is a gap level, and now prices are just consolidating here, but they are creating a little bit of a bearish candle. So it'll be interesting to see now whether if gold and silver start correcting, whether copper starts to correct and starts to move down from this level of supply. Key support levels on copper, 800 odd levels, and key resistances are 830 levels as we speak. Let's move on to the next chart. It's going to be crude oil. And if you look at crude oil, came into this supply zone strongly, then consolidated and moved to the downside. Now we are taking a little bit of a support at the 5,800 level. So it'll be interesting to see. Today is also crude oil expiry, which means there's going to be a lot of rollover happening for the November month series. And it'll be interesting to see how crude oil shapes up in the coming weeks after the rollover period. Let's look at natural gas. Natural gas also reacted beautifully to this level of supply, hit this level of supply, turned down, came into this level of demand now, and is holding this level of demand. Nice open interest level 190 level holding, but we also see that 200 and 210 are going to be the closest resistances on natural gas. This level, honestly speaking, not a great level, but taking into consideration, we also have another level below it, which means that right now price could possibly react from the lower level after giving a little bit of a deep retracement inside this area. 190 to 180 is going to be a key support area. And once 200 breaks to the upside, then we are going to see a little bit of a higher or a bigger move on natural gas, first towards 210 odd levels and next towards 230 odd levels. This is what the charts are telling us. All right, so pretty much this is it from me for this week. I hope you all enjoyed the analysis. And if you do like our analysis, do give your valuable comments in the comment section. And if you're still not a subscriber of Sharekhan Education, hit the subscription button and become a member soon so that you can get all the great videos that Sharekhan Education is producing for all of you guys. Have a lovely trading week, everyone. See you all next week. Bye-bye. Thank you.
This should not be treated as a recommendation. Please conduct your own analysis or consult a financial advisor before investing.